Hello traders and welcome to another video review. Today is Wednesday, October 5th, 2022. Very interesting day ahead of us, so let's dig into the Forex calendar. What do we have here? Well, the first thing is that the data from the New Zealand had been published overnight at 3 o'clock to be more specific, and this is what we have. Reserve Bank of New Zealand Interest Rate Decision and Interest Rate Statement were published at 3 o'clock, and the market the RBNZ behaved exactly as expected. The bank increased or hiked the interest rate from 3% to 3.5% as expected. 30 minutes before, retail sales data from Australia had been published, and the data were in line with the expectations of 0.6%, which means they're decreasing. Their previous reading was 1.3%, now it's 0.6%, so the retail sales are going down in Australia. During the London session, the most important events are Composite PMI and the Services PMI data from the UK scheduled for release at 10:30. During the New York session, we got ADP Non-Fram Employment Change scheduled for release at 2:15. Then we got ISM Non-Manufacturing PMI scheduled for release at 4 o'clock, and then at 4:30 Crude Oil Inventories are scheduled for release. So very important data for all of you crude oil traders. So looks like a very nice day for the events. Looks like a very nice day for the data release that might trigger more intense day, more active day, more volatility on the markets is expected, and we will definitely take a look at the this is New Zealand dollar, of course, British pound and American dollar. So stay with me for more of the technical analysis in a minute. New Zealand dollar versus the US dollar daily time frame chart is showing us a nice spike up towards the level of the high was made at 5,800. The next target for the bulls is 5,841, so there's only 41 pips miss towards this level, and if we get there, the whole bounce will be made in 3 waves, ABC to the upside. That spans over 4.88%. Pretty nice bounce, however, still lower than the last bounce of 6.72% made in the middle in the end of the July, in the middle of the August 2022. So overall, the downtrend is intact. The market is trading below the key technical resistance, 5,841 pips, 5,920 pips, below 30-day moving average, and the market is still bouncing from the extremely oversold market conditions. So the New Zealand dollar behaves according to the plan. So let's now start the analysis of the British pound. This is daily time frame chart with the very interesting bar here. On the daily time frame chart, this is very big pin bar with a very big spread. However, if I switch to the 4-hour chart, you can see that we have the beginning of the bullish engulfing, and then confirmation and extension. So this 3 days, sorry, this is 12 hours. This is 4-hour chart, so this is 12 hours, and the market bounced in a V shape here. So I label this as wave 1, then correction wave 2, another very interesting candle during the Fed meeting, and then wave 3, correction wave 4, and widely expected wave 5 is now being developed. The target for the wave 5, according to the Fibonacci projections and technical levels, is located at 1.1560 towards the 1.1622. This is the upper zone level. So this is the projected level. However, please notice the fact that we bounced above the 1.1410, which now is the technical resistance for the market. So this is very important technical resistance. This is important for the short term, mid term and long term, because that's the level that has not been touched since 1985. So right now, what it looks like, it's like a test of this level, a little bit overstretched, because as you know, we've been trading as high as 1.1494. The target is still ahead of the bulls. However, it looks like because of this extremely overbought market conditions on the 4-hour chart, because they are not overbought on the daily time frame chart, we might see some kind of a spike higher and then pullback or the correction. So please keep an eye on the British pound today as well. The next market is the US dollar index. What is going on there? So this is the 4-hour chart of the US dollar index, and as you can see, we've been moving lower on the US dollar index towards the extremely oversold market conditions on the 4-hour chart. As you can see here, we are trading below 30 periods moving average. We broke below this technical support towards the level of 110.25. The low was made at 110.03. So let's just switch to the daily time frame chart to see what is going on here. And you can see this pattern here. Let me remove these blue lines for you guys to see it more clearer. So that's the current correction. Okay, so let's just be more specific. Here you go, roughly 4%. Okay, so that's 4% correction, which is almost in line with the previous correction, 4.26. All right, so that's only 0.2% is missing. Maybe it's even a little bit more than, yes, maybe something like this. And then of course the market will still be able to rally higher, because that's the overbalance, of course, of the time and price. Let me just change this color to red. There you go. This high here at 114.75 is the current swing high made during the extremely overbought market conditions on a daily time frame chart. So right now on a daily time frame chart, we are just breaking below the level of 50 on the RSI, which means this is the, of course, the neutral level. So if we won't break higher, I mean, if we won't bounce higher, it doesn't matter which level, 110.78, 111.79, those levels are now the technical resistance for the price, of course. If we won't bounce from 30-day moving average around 110.22, then of course the market will move lower, and then the momentum will be much more negative, much more weaker than it is right now. So I think 109.46, 109.27 will be violated in that scenario, and the next target for bears is located at 107.45. This is the zone. Okay, so if we get there, if we won't bounce here, there's a strong support here, very nice correction, 4% is enough for the market to bounce. Then we will see at least 6.5% correction on the US dollar index, which means, of course, in that case, US dollar will go, of course, down, Euro dollar will go up, stocks like S&P 500, Dow Jones, Nasdaq will go up, and the British pound will extend the rally higher. So please keep an eye on the current behavior, market behavior of the US dollar index. It looks very, very interesting. If we break to the downside, US dollar to Japanese yen will go lower. Last but not least, let's take a look at the Bitcoin. What is going on there? And as you can see, very interesting developments are on the Bitcoin market. Please take a note. We are testing supply zone again. Nice candles here. All of them, almost except this one, are green. Test of the blue line, bounce like a rocket from 18,000, let's say 19,000 to 20,400 and something. This is over $1,500. Very nice. So this is like a let me just check it. This is over 8% bounce, not too bad for a bounce. And of course, Bitcoin bulls are having problems with the supply zone, so they're trying to break higher because the next target is 22,410. So the next target is even higher, and that's 18%. So there is 10% more to be done here, because there is nothing, virtually no important technical resistance here between 20,580 and 22,410. Okay, so the bears are trying to break above this supply zone, and now you see why. Okay, now you see why. Because if they break, they might even test, of course, 20,410, and the big candle high located at 22,782. If they break above this level, they are back in the game. For the short term, the market will rally, and the Bitcoin might hit higher levels inside of the old channel. But first, we need to break above the supply zone, and it looks like that the market is trying hard to do it. Whether it will, we will see the result very, very soon. Extremely overbought market conditions, again on 4-hour chart, just like it was here. So will history repeat? If it will, we are back inside this consolidation zone. If we break, that might be huge for the Bitcoin, and we might rally another 10% higher. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.